Are you ready to transform your mindset and embark on a path towards long-term wealth creation? What are the strategies wealthy individuals apply to multiply their wealth? In this video, we're about to explore these strategies and know the secrets of wealth creation. Taking inspiration from those who've already crossed the finish line, stay till the end to know each strategy. Welcome back to AJ's Info. Let's achieve success together. Number 1, start early and stay consistent. The first principle is to start early. The sooner you begin investing, the more time your money has to grow. Compounding interest can turn small, early investments into significant wealth over time. Make your money work for you, not the other way around. By investing consistently, you are buying assets at various price points, reducing the risk associated with trying to time the market. It's not about timing the market, but time spent in the market. Regular, disciplined investment over time has proven to be a successful strategy for wealth creation. Investing consistently, but only in the type of investment, can be risky because you never know whether it will work or not. Therefore, many big investors like Warren Buffett suggest our strategy number 2. Diversify your investment. Don't put all your eggs in one basket. Spread your investments across various asset classes such as stocks, bonds, and real estate. Diversification helps spread risk across different assets, reducing the impact of poor performance in any single investment. This principle helps to mitigate risk and increase potential returns. Number 3, do not take decision based on your emotions. Keep emotions out of investing. Investment decisions should be based on careful analysis and not swayed by market fluctuations or temporary downturns. Patience and discipline are key in the face of volatility. Not taking decisions based on emotions involves making rational, informed choices. Number 4, multiple streams of income. With one source of salary income, you may not reach the destination. Understand the power of passive income. Investments that generate income without requiring your active involvement are crucial in wealth building. Rental properties, dividends from stocks, or interest from bonds are examples of passive income sources. So get knowledge on these and start investing. Number 5, make more with money. Reinvest your profits. Instead of spending your gains, reinvest them into your portfolio. This will accelerate your wealth creation process using the power of compounding. Number 6, tax implications. Don't ignore the tax implications of your investments. Be aware of the tax benefits associated with certain investment vehicles. Utilize tax-advantaged accounts. Number 7, real estate income. Consider investing in real estate. Property investment can provide regular rental income as well as potential appreciation. It's also a good hedge against inflation. Appreciation can significantly contribute to your overall wealth and financial stability. Number 8, networking and collaboration. Networking allows you to tap into a broader pool of investment opportunities that you might not be aware of on your own. Networking with potential investors or financial institutions can open doors to additional capital for your investments. Networking leads to professional support, building a support system, business development opportunities, mentorship, and guidance. This will help to increase wealth in long term. Number 9, value investing. Value investing is an investment strategy that involves identifying undervalued assets, such as stocks or real estate, with the aim of purchasing them at a price below their intrinsic value. Value investors follow the belief that over time, the market will recognize the true value of fundamentally sound assets, leading to price corrections and returns for patient investors. Adopt a long-term perspective, being patient and disciplined even if the market does not immediately recognize the value of the chosen assets. 10th strategy is patience and persistence. Patience is crucial for leveraging the power of compounding. Persistent contributions to investment accounts, such as regular additions to retirement funds, contribute to sustained and consistent growth. The strategy of patience and persistence in investing involves adopting a long-term perspective, staying committed to your financial plan, and navigating the inevitable challenges with resilience. These tried and tested strategies from successful investors are not just for the elite, they're for anyone seeking long-term financial security and wealth. Hope you gain value from this video. Subscribe for more value-building videos. From the bottom of our hearts, thank you for joining us today. See you in the next video. Take care.